a pretty specific thing that Ray Dalio is talking about. You raise taxes, and the U.S. could be perceived as a place inhospitable to capitalism and capitalists. Any truth in that?
I would say that's somewhat alarmist and incredibly premature. If you look at our, first of all, you have to look at the panoply of tax rates. Marginal tax rates on income in the United States are below that of almost all of the developed world. And corporate taxes now are among the lowest. At 35%, they were not. There was a broad consensus, including President Obama and Vice President Biden, to lower corporate taxes to 28%. I think President Biden in his campaign supported that. In the 25% range, we're still highly competitive. So I don't think we can operate a fiscally sound federal government economic and fiscal policy without having some tax adjustments, given the investments that I think the majority of people agree should be made.
Ralph, there's corporate taxes, but this is also going to hit people earning over $400,000 the hardest. Evercore has a wealth management arm. How are your clients preparing for this?
Well, first of all, I think a couple things should be said. There will be another longer-term oriented economic plan and focused on physical infrastructure and human capital, I think, as well. Some spending on, college, education, research, et cetera. I think the difference between this second economic program from the Biden administration and the first is that this one will not be pure spending. They'll have some significant pay-fors in there. And I think we have to be very careful to not react excessively to the list of things that will be proposed, which will be pretty long and pretty comprehensive and probably fairly reflective of the president's campaign promises. And that would include taking the corporate tax rate to 28. Now, keep in mind, these will be proposals. Reducing or eliminating the capital gains differential for people earning $1 million or $2 million or more, eliminating carried interest, eliminating stepped-up basis, maybe increasing the top tax rate. And I'm going through these in reverse order of their probability of occurring, returning the estate tax to where it was prior to the Trump tax cuts. And so there's going to be a long list of adjustments that are going to be proposed. But then you have to recognize that you have a very evenly divided House and Senate, and that there are among the Democrats, particularly in the Senate, those who are representing very, very conservative states. So
Ralph,
there may be a lot proposed, but I think the market would be making a mistake to assume that a lot of that will become law.
Ralph, that's exactly what I was going to ask next. Is this going to get ugly?
It's politics.
Well, I think all of our hope is that we might actually have a year of, to coin a word, unugly politics. Although I haven't, I think the tone has been turned down a lot. And that's, I think, to the benefit of the entire country. I think President Biden is extremely sincere about his efforts to reach across the aisle. But there's a lot of bad muscle memory in Washington where if the Republicans say black, the Democrats say white, and vice versa. And sadly, that's on both sides of the aisle. And, huge credit to President Biden to trying. And I think he hopefully will find some points of agreement on infrastructure and research, at least on the spending side.
Ralph, I hope that is the case. Can I just show you this chart? Well, I hope everybody else at home can be able to see it, because I'm wondering about whether or not we find ourselves in a situation that we end up with a Biden boom followed by a Biden bust. And this chart, I think Matt Boesler put it together a little bit earlier on, is a fantastic chart. Basically, 5-year break-evens have surged past 10-year break-evens to the point at which we've never seen the spread between the two being as negative as they are now. The market is pricing in a huge surge of inflation and then that falling basically off a cliff, Ralph. Is that the Biden boom and the Biden bust? And if it is, how do we avoid that?
Well, I think the fiscal path that we are on today, which, by the way, started with a $1 trillion deficit at 3.5% unemployment in the Trump administration, is an unsustainable path, period, end of story. And we can't continue to mortgage our children's and our grandchildren's future by piling on trillions and trillions of dollars worth of debt. And there are a number of reasons for that. One is that the share of GDP for federal taxes has gone down from about 19.5% to 16.5%. That's a huge change. And the spending hasn't really changed. And we have huge needs in this country, and we have this wave of entitlements also coming due to the aging of the population. Yep. So there's going to be a day of reckoning, or a decade of reckoning for this. I don't think, quite honestly, that the next year is the year to start that. But we're going to return pretty quickly, I believe, to maybe not full employment, but to rapidly approaching high employment. And then we really have to get on our fiscal issues.
Okay, so taxes are going to go up, and I'd like you to put your asset management hat on now for a moment. What do people sell? We look at a market, we've got an S&P that's at a record high today. What do people sell if taxes go higher? Because we could see a significant amount of tax selling.
I think this is an unpopular view among capitalists, but I do think we have a pretty serious long-term problem in this country, and that we have undertaxed the returns of capital compared to the returns to labor. And that is the single public policy issue that has widened the wealth gap in this country. And I'm actually in favor of correcting that. That's a minority view among people who work in the industry that I've spent 40 plus years in. And honestly, I don't think that would have if anything, depending upon the effective date of something like that happening, it might stimulate some tax encouraged selling to take advantage of the remaining days of capital gains differential. But once that was behind us, I don't think it would have a tremendous effect on the capital markets at all. I don't know anyone.
Yeah,
I don't know anyone who says, "Oh, I'm not going to make this good investment because I'm going to be taxed at 37% rather than 20%."